Welcome everyone and thank you for joining today. We are about to dive into the world of on-balance volume, also known as the on-balance volume indicator. This is a powerful tool for tracking momentum in the markets. By the end of our time together, you will know exactly how to set up on-balance volume, interpret its signals, and use it to make better trading decisions. So if you are excited to improve your trading skills, stick around because we have a lot to cover, and it is going to be worth your time. Imagine having a secret window into the market where you can see whether the smart money is buying or selling before it shows up in the price action. Let us start with the basics. What exactly is the on-balance volume indicator, and why should you care about it? The on-balance volume indicator is a momentum-based tool that uses trading volume to predict changes in price. In simple terms, it keeps track of volume on up days and subtracts it on down days. The result is a running total that gives you an idea of whether more buyers or sellers are active. It is valuable because it helps confirm trends, spot reversals, identify breakouts before they happen, and even recognize specific chart patterns that can signal future price movements. These patterns include formations like head and shoulders, double tops and bottoms, triangles, flags, pennants, and wedges, all of which can indicate potential shifts in market direction. Essentially, it gives you an edge. And who does not want an edge when it comes to trading? When it comes to chart patterns, on-balance volume can be very helpful in confirming classic patterns such as head and shoulders, double tops and bottoms, triangles, and flags. For example, if you see a head and shoulders pattern forming on the price chart, you can use on-balance volume to confirm whether the volume is declining during the right shoulder, which is a key signal of a potential reversal. Similarly, with double tops or bottoms, on-balance volume can help confirm weakening volume during the second peak or trough, signaling that the trend may be about to reverse. Another useful application of on-balance volume is in identifying breakouts from triangle patterns. Triangles, whether ascending, descending, or symmetrical, often show a price squeeze where the price action becomes tighter. On-balance volume can help confirm whether the breakout is real by showing a significant volume increase when the price breaks out of the pattern. If the on-balance volume line spikes upward during an upward breakout from an ascending triangle, it is a good indication that the move has volume behind it and may continue higher. Flags and pennants are continuation patterns where the price takes a short pause before resuming the previous trend. On-balance volume is useful here because it helps confirm the breakout of these patterns. If the price is moving out of a flag and on-balance volume is rising, it suggests that volume is supporting the move, giving you more confidence to trade in the direction of the breakout. Using on-balance volume to recognize these chart patterns can give you an additional layer of confidence in your analysis and improve your overall trading success. By understanding not only the direction of on-balance volume, but also how it behaves in relation to different chart patterns, you can be more certain when entering or exiting a trade. Alright, let us talk about how to add the on-balance volume indicator to your charts. If you have a charting platform, it is really simple. All you have to do is open your charting software and look for the indicators section. It is usually in the toolbar, and you can just type in on-balance volume in the search box. Once you find it, click to add it to your chart. That is it. You are ready to start using it. You will see a line below your price chart, and that line is your on-balance volume line. This line holds a lot of useful information that can guide your trades. So what does this on-balance volume line actually show us? The on-balance volume line works by adding volume on days when the price closes higher and subtracting it on days when the price closes lower. The result is a cumulative line that can reveal if buying or selling pressure is increasing. This is key because it helps us understand if the so-called smart money is buying into or selling out of the stock. If the on-balance volume is going up, it suggests more buyers are stepping in, which we call accumulation. On the other hand, if the on-balance volume is going down, it suggests more sellers are stepping in, which is called distribution. On-balance volume can also help in identifying various chart patterns that indicate potential future price movements. For example, let us look at the head and shoulders pattern. This is a reversal pattern that often indicates a shift from an uptrend to a downtrend. On-balance volume can provide additional confirmation by showing declining volume during the formation of the right shoulder, which suggests weakening buying pressure and supports the idea of an upcoming reversal. Another key pattern is the double top or double bottom. These patterns occur when the price makes two peaks in the case of a double top or two troughs in the case of a double bottom. On-balance volume can help confirm these patterns by showing reduced volume on the second peak or trough, indicating that momentum is fading. This can be a strong signal that the current trend is losing steam and may soon reverse. Triangles are also common chart patterns, which can either be ascending, descending, or symmetrical. These patterns show a period of consolidation before a significant move, where traders try to determine the next direction of the price. Let us go over each type of triangle pattern in detail and see how on-balance volume can help confirm the next move. Ascending triangles are bullish patterns that form when the price makes higher lows while consistently hitting resistance at a horizontal level. This creates a triangle shape that slopes upwards. An ascending triangle indicates that buyers are becoming increasingly aggressive and they are pushing the price higher. A breakout from this pattern occurs when the price finally breaches the horizontal resistance level. When this happens, a spike in on-balance volume can confirm that the breakout is supported by increased buying interest. If on-balance volume is rising during the breakout, it signals that strong buying pressure backs the upward move, making it more likely that the price will continue to climb. Descending triangles, on the other hand, are typically bearish patterns that form when the price makes lower highs while finding support at a horizontal level. This pattern suggests that sellers are gaining control and are forcing the price lower. A descending triangle indicates that selling pressure is building up, and a downward breakout occurs when the price breaks below the support level. On-balance volume can be particularly helpful here as well. If there is a drop in on-balance volume during the breakout, it suggests that sellers are dominant, confirming strong bearish sentiment and increasing the likelihood that the price will continue to fall. Symmetrical triangles are neutral patterns that indicate indecision in the market. These triangles form when the price makes both lower highs and higher lows, converging into a point. The breakout direction from a symmetrical triangle can go either way, depending on whether buyers or sellers gain control. On-balance volume plays a critical role in confirming these breakouts. If on-balance volume begins to rise significantly before a breakout to the upside, it suggests that buying pressure is increasing and the breakout is more likely to be successful. Conversely, if on-balance volume drops before a downward breakout, it indicates increased selling pressure, suggesting that the bearish move will hold. The key takeaway with triangle patterns is that on-balance volume provides an additional layer of insight into whether the breakout is supported by strong buying or selling interest. This helps traders avoid false breakouts and enter trades with greater confidence, knowing that volume is backing the price move. Flags and pennants are continuation patterns that indicate a short consolidation before the prior trend resumes. Flags appear as small rectangles, while pennants have a triangular shape. On balance, volume can confirm breakouts from these patterns by showing a rise in volume as the price exits the flag or pennant. This tells us that the pause in price movement is over and that there is renewed momentum supporting the breakout. Wedges are another pattern to consider, which can be either rising or falling. Rising wedges are often bearish and signal a potential reversal, while falling wedges are bullish and suggest a possible upside breakout. On balance, volume can be very useful in confirming these patterns. For example, if the price is forming a rising wedge, but on balance volume is declining, it strengthens the case for a bearish reversal. Similarly, for falling wedges, a rising on balance volume line supports the likelihood of a bullish breakout. By learning to recognize these patterns and using on balance volume as a confirmation tool, you can significantly improve your ability to predict market movements. It helps you avoid false breakouts, provides confidence in trend reversals, and ensures that volume is on your side before entering a trade. Understanding both price patterns and volume behavior together is key to making smarter, more informed trading decisions. Now that we know how on balance volume works, let us learn how to read its signals. When both price and on balance volume are going up, that is a strong confirmation that the trend will probably keep moving in the same direction. It tells us that the volume is supporting the price move, and that is a great sign of strength. When both price and on balance volume are falling, it confirms the downtrend, which means sellers are in control and the trend will likely continue. However, chart patterns like head and shoulders, double tops, and triangles also come into play when reading on balance volume signals. For example, during the formation of a head and shoulders pattern, you can use on balance volume to confirm that volume is weakening as the right shoulder forms. This decline in on-balance volume during the formation is a warning signal of an impending reversal, further adding context to the chart pattern. Similarly, with double tops and double bottoms, on-balance volume can provide critical confirmation. During a double top, the on-balance volume may show reduced volume on the second peak, indicating a weakening of the upward trend. This loss of momentum signals a possible bearish reversal. During a double bottom, declining volume during the first bottom followed by increasing volume during the second bottom can signal accumulation and a potential bullish reversal. Triangles such as ascending, descending, and symmetrical are also enhanced by monitoring on balance volume. If the on-balance volume line rises as the price is testing an ascending triangle's resistance, it suggests that there is buying interest that may result in a breakout. On the other hand, if on-balance volume declines as the price nears the lower support in a descending triangle, it indicates strong selling pressure, confirming a potential breakdown. But here is where things get interesting. We also want to watch for divergences, which means that price and on-balance volume are moving in opposite directions. If the price is going up, but the on-balance volume is falling, it could mean that the trend is weakening, and we might see a reversal soon. Divergences are powerful signals, especially when they coincide with chart patterns, as they provide additional evidence that the trend might not be sustainable. How about we talk a little about some strategies you can use with the on-balance volume indicator? First, let us talk about trend confirmation. If the price is making higher highs and the on-balance volume is also rising, that is a strong buy signal. It means the volume is backing the move, so you can be more confident in entering the trade. If you are trying to spot reversals, you want to look for divergences. Let us say the price is climbing, but the on-balance volume is declining. That is a signal that buying interest might be fading, and you could be looking at a possible reversal. Another important strategy is to use on-balance volume in conjunction with chart patterns to enhance your trading decisions. For example, when a head and shoulders pattern forms, on-balance volume can confirm the reversal. If the volume is declining as the right shoulder forms, it suggests a weakening trend, which adds credibility to the reversal. The same applies to double tops and double bottoms. Reduced on-balance volume on the second, peak or trough, indicates a weakening trend and the likelihood of a reversal. Triangles such as ascending, descending, and symmetrical are also useful when analyzed with on-balance volume. For instance, when the price is consolidating within a triangle and on-balance volume starts to rise, it signals an increase in interest, suggesting that a breakout may be near. If the price breaks out of an ascending triangle and the on-balance volume spikes, that is a strong indication that the move is backed by volume, making it more likely to continue in the breakout direction. Flags and pennants are classic continuation patterns that traders use to identify pauses in a strong trend. When these patterns form, you can look at the on-balance volume to see if it is rising along with the price as it breaks out of the pattern. If so, it confirms that the volume is supporting the move, which means there is a higher probability that the previous trend will continue. You can also use on-balance volume to analyze wedges, which are often signals of potential reversals. In a rising wedge, if on-balance volume is falling, it adds weight to the bearish reversal scenario. Conversely, in a falling wedge, if on-balance volume is rising, it suggests the move may break upward, providing a bullish setup. Another great strategy is to use on-balance volume for breakout trading. When the price breaks a key level of resistance and the on-balance volume spikes up, that is a sign that volume is behind the move, and it increases the chance that the breakout will hold. Additionally, in range-bound markets, if the on-balance volume begins to increase while the price remains in the range, it is a sign that a breakout could be imminent. By watching for these shifts, you can position yourself ahead of the move. Combining on-balance volume with chart patterns not only helps confirm trends, but also gives you more context for understanding the underlying volume activity. This allows you to differentiate between false breakouts and genuine ones and makes your trading decisions more reliable. To make your trading analysis even stronger, consider combining on-balance volume with other indicators. You can use on-balance volume alongside moving averages. For instance, if the price is above a moving average and the on-balance volume is rising, that strengthens the case for an uptrend. Another good combination is using on-balance volume with the relative strength index. If the relative strength index is showing oversold conditions, but the on-balance volume is starting to rise, that could be a good sign that a reversal is near. You can also combine on-balance volume with the moving average convergence divergence indicator. A moving average convergence divergence crossover together with a rising on-balance volume can be a powerful buy signal. Now let us cover some common mistakes traders make when using the on-balance volume indicator. The first big mistake is ignoring volume divergence. If the price is rising but on-balance volume is not following along, that is a red flag. It can mean that the price move is weak and could reverse. Another mistake is relying too much on balance volume alone. While on-balance volume is definitely a great tool, It works best when you combine it with other indicators or price analysis. Always try to look at the bigger picture. And do not forget that overreacting to small moves in the on-balance volume can lead to bad decisions. Look for significant shifts in the on-balance volume to confirm trends or reversals, not small blips. On-balance volume can be adapted for different market situations and can play a critical role in various trading environments. Let us discuss how on-balance volume can be used effectively in trending, range-bound, and volatile markets in more detail. In trending markets, on-balance volume is particularly useful for confirming the strength of an ongoing trend. If the on-balance volume is rising during an uptrend, it suggests that the uptrend is well supported by increased volume, indicating that the trend has a higher likelihood of continuing. For instance, when the price is making higher highs and the on-balance volume line is also climbing, this is a sign that buyers are confident and the trend has solid backing. On the other hand, during a downtrend, if the on-balance volume is decreasing, it signals that selling pressure is strong and the bearish movement is likely to persist. In range-bound markets, where prices oscillate within a horizontal band, on-balance volume can help predict potential breakouts. If the on-balance volume starts to rise while the price remains within the range, it suggests accumulation may be taking place, hinting that an upward breakout could be imminent. Conversely, if on-balance volume is declining within the range, it indicates distribution and points toward a potential downward breakout. Observing how on-balance volume behaves as the price approaches key levels of resistance or support can give valuable clues as to whether a breakout is likely to succeed or fail. The key here is to wait for a significant increase in on-balance volume to confirm the strength of the breakout. Finally, in volatile markets, on-balance volume can be instrumental in identifying whether institutional investors or other large players, often referred to as the smart money, are moving in or out of positions. During periods of heightened volatility, large spikes in on-balance volume can signal significant buying or selling activity, which often precedes a strong price movement. For instance, if the price is erratic but on-balance volume is steadily climbing, it suggests that smart money may be accumulating despite the apparent chaos, indicating a possible upward movement once the volatility settles. Conversely, a declining on-balance volume in a volatile market suggests that larger players might be offloading positions, which could signal an impending downward move. Additionally, combining on-balance volume with chart patterns in these market situations adds more clarity to your analysis. For instance, if the price is stuck in a range but forms a bullish flag while on-balance volume is rising, it indicates that the breakout from the flag pattern could be well supported and is more likely to succeed. In trending markets, patterns like ascending triangles combined with rising on-balance volume suggest further bullish continuation, while in volatile environments, watching how on-balance volume reacts to price swings can help differentiate between mere noise and significant shifts in market sentiment. By adapting on-balance volume to different market conditions, traders can gain deeper insights into price movements and make better informed trading decisions. Understanding how volume interacts with price in trending, range-bound, and volatile markets can provide a comprehensive view of market dynamics and help traders navigate different trading environments with greater confidence. All right, let us quickly recap. The on-balance volume indicator is a simple yet very effective tool for confirming trends, spotting reversals, and predicting breakouts. By keeping track of whether volume supports price movements, you can make much more informed trading decisions. Start by adding on-balance volume to your charts and pay attention to trends, divergences, and volume spikes to confirm your trade ideas. Make sure you combine on-balance volume with other indicators like moving averages or the relative strength index for a better and more accurate analysis. If you are interested in getting more out of your trades, on-balance volume is definitely a tool you should add to your toolkit. Keep practicing and use it along with your existing strategies. Soon you will see how helpful it can be in making your trades smarter and more confident. If you have questions about on-balance volume or want to share your experiences using it, feel free to reach out. It is always great to learn from each other and improve together.